What's going on, my peoples? It's your boy Nate be lit because Nate really does be lit. And it's officially 3 minutes past midnight, but I said I'm not going to bed until this is done for you guys. So let's get into it, shall we? We are doing another pre-week market outlook with a smidgen, a splash of black man timing, which is why I'm doing it so late, right? But again, I'm not going to bed until this is done. So let's get into it. Right. First things first. So what happened last week? From a fundamental perspective, last week, we had quite some news for the dollar. So in regards to CPI, which is one of the Fed's measures of inflation, we had CPI month on month and year on year come out. So month on month came out a little bit higher. So we could see a tiny bit of strength bring price up to the higher point of interest that I'm looking at on the dollar. However, the overall, year over year data that came out on Tuesday came out 0.1% lower from 2.4% to 2.3%. So overall, we are making steady progress to the downside. Obviously, the Fed want to see the interest rate or inflation rates rather come lower down to their 2% target. Now, because we are making significant headway down to said target, I do believe that soon they will cut the rates. Is it going to be next reading? We have no idea. I don't have a crystal ball. I'm just looking at the numbers and obviously acting in regard, I'm moving in regards to that, So if the numbers continue coming out lower, I will be bearish on the dollar, right? But right now, everything's kind of pointing towards a bearish dollar. You've got the fact that number one, CPI has obviously been coming lower. We know that PPI also last week came lower. So if we just scroll on down to here, we can see the PPI month on month came out lower. It went from minus 0.1% to minus 0.4%. So, minus 0.3% lower, which is good for us, for those of us that use fundamentals. Everybody should be using fundamentals, yeah, because that gives you your directional bias, right? So obviously on a month-on-month basis for the CPI, we can see that obviously we've come lower, right? Now also, we can also see, move this over here, we can see that the PPI, no, let me go back on the screen over here. I did have it on here. Here we go. We have the PPI that came out last week as well. Came down from 2.7% to 2.4%. I don't know why it says 3.4 on here. I'm gonna have to figure that out, just so I know for next time. But yeah, we did obviously make our way lower in regards to PPI year on year. So from an inflationary standpoint, CPI has come out lower year on year. PPI has come out not only lower on the year on year basis, but on a month to month basis has also come lower as well. And PCE, which we had out last week or the week before, also came out lower. So on an inflationary standpoint, inflation is coming lower. And for those of you that don't know, inflation, when it comes lower, usually the interest rates will tend to follow that, right? Now that doesn't just mean, okay, as soon as inflation comes lower, bam, they must immediately bring the interest rates lower. Usually the interest rates will lag behind, but that is typically how it works. Inflation comes lower, interest rates come lower. Why? Well, because the interest rates is the Fed's tool, I'll use that word, their tool of keeping inflation at bay. Think of inflation as a car heating up. What does every car have? Coolant. And for the economic machine, if you will, the engine coolant is essentially the interest rates. So they only increase the interest rates when inflation is coming higher. But now that inflation is coming lower, there's no reason for interest rates to be to be high, or not so much to be high, but for them to increase it anyway, right? So we know that because we're making significant headway down to the 2% target, interest rates should follow. So that's why I'm bearish on the dollar. Those two things coupled up with the fact that obviously Donald Trump is in office. Donald Trump is usually bearish for the dollar. He's going to do what's best for business, right? And when businesses are being when money's being pumped into businesses, companies, i.e. risk assets, money will usually flow out of less risky assets, which is obviously, the dollar, for example. That's why the dollar is classed as a safe haven. So when money's flowing out of safe assets, they're usually flowing into risky assets. So on this occasion, that's why we're seeing the dollar obviously be bearish, and at the same time we're seeing indices go higher, right? So outside of that, we had obviously Fed Chair Powell had a speech last week as well, where he alluded to a couple of things. Number one, the fact that, what was it called? The shock, like stock shock or something like that. Basically meaning that, we could basically potentially see a shock in, production. And obviously what that means in English is, if production is going to come lower because of obviously Trump's tariffs and all the other stuff. I can break that down in a different video if you guys want. But if there is a shock in production, what that can mean is there's less products in production, which then means that if there's less products in production and high demand for it, what that can essentially mean is that products pricing will go higher. And we already know that businesses are not going to front the cost. They're just going to pass the cost on to the customer. So more spending is obviously going to heat up the economic machine, i.e. cause inflation to come higher. So I know Powell did allude to that. He also did allude to the fact that inflation is actually making progress. So, that is kind of a hint to say that, they're starting to become happy with where inflation is going. And that usually can be a hint that interest rates can be cut, right? Does that mean, again, that they're going to cut the rates right now? No, it doesn't, right? We have to look at what they're going to do and act accordingly, right? So that was last week. Outside of that, we didn't really have too much else, really. Unemployment claims didn't really move that much. So I wasn't really going to do too much to the direction of the dollar. However, moving on to this week, we have some key data that I will be looking at personally is going to be the Australian dollar cash rate, because we are starting to distribute on NZD/USD, and at the moment I believe that is leading the story, if you will. And I do believe that Australian dollar will follow, and they will both start to make their way lower, especially if we do see this come lower as well. Obviously China, who do a lot of trade with Australia and New Zealand, they are currently financially in a bad way, right? So if they're not doing a lot of import with Australia and New Zealand, what's going to end up happening is their currency is obviously going to be weak as well. Couple that up with the fact that interest rates may potentially come down. Again, I know it's forecast, and I don't really care what the forecast is saying. I'm more interested in what the previous and what the actual number is that's going to come up. So by the time I wake up in the morning, we'll have this data out, right? Obviously, this is being filmed at, again, midnight on Tuesday, early Tuesday morning, right? So moving on, we also do have some CPI news for the CAD as well, which is also going to be interesting, because I've been looking at USD CAD, but it's in a little bit of a precarious place right now. So this will definitely help to give some sort of forward moving direction, whether it's higher or lower. Obviously, I don't know that, but I will be paying attention to this tomorrow as well. We've also got some retail sales come. Oh no, I don't really care about that. That's not for the dollar. Retail sales for the CAD, which can also have give us some direction as well in regards to the CAD, especially obviously USD CAD, which I like to trade. You guys have probably seen the previous trade breakdowns on USD CAD before on my YouTube as well. So that's really, I mean, I know we've got PMI and everything coming out, on Thursday as well. Unemployment claims, if it's a crazy number, maybe, but as of recent, hasn't really been given that much source. So moving on to the technical side of things, let's start off on the dollar, as you guys know I like to do. So on the dollar, obviously I know before I've even come onto this chart, I understand that obviously we're bearish because of the reasons I mentioned earlier. So if I just step out to a higher time frame very quickly, we can see that, we redistributed. A distribution plus a redistribution equals a bearish market cycle. And right now, if I come down to a lower time frame now, I can see that the most previous redistribution that caused the low of the larger redistribution to be broken is this one over here. Have we met the 50% of it yet? No, we haven't, right? So we can still come up a little bit higher. Obviously, I know we had CPI month over month come out a little bit higher as well. So that could be the thing that brings us up a little higher. I am aware of that. However, on a lower time frame market cycle, I can see that obviously we had a accumulation. If I just box it out roughly, this was my accumulation. We did have, a lower time frame reaccumulation as well, which we did break yesterday technically now, seeing this is Tuesday morning right now, right? So we did actually break that. So if we make our way up into this box and give a distribution, i.e. evidence that sellers are coming into the markets, then I will look to take this thing lower. If we don't get that and we end up making our way higher, then I will be looking at, shorts up here if we do get the distribution up there, right? All failing those two things, then potentially we can make our way even higher. The higher the better, because that just means, better risk to reward down to this low, which would obviously be my target for this, right? Now, obviously you guys know, if you don't, I'm letting you know now, we don't directly trade the DXY. So we just trade the inverse of that, which is obviously GBP USD and Euro USD. So let's move on to those, shall we? So starting off on Euro USD, if we just inverse this for a minute, notice how it looks exactly the same as what the dollar index did, right? So for this here, obviously I put a line down here saying that the dollar index broke, because the dollar index actually did break on the dollar, but obviously on Euro USD it hadn't broken, right? So if I just bring this back to normal, I'm looking at this as this is obviously being broken, right? Because this is the inverse of dollar index. So now that we've broken this high, essentially, I'm waiting for price to come into this same box that we were looking at on the opposite side, obviously on dollar index. I hope you guys are still following. Now, if we do that and we get an accumulation in here, then obviously I'll be looking to buy this thing up. I can target these highs. I can target potentially this high as well if the dollar does start to really cascade to the downside, right? Moving over to GBP USD, it's exactly the same thing. Literally, it's exactly the same thing, right? So on the dollar, essentially, we've already broken this high, right? I don't know if we've broken this high on this actual pair. Oh, we have. Okay, fair enough. So we've broken this high, right? So if we come lower into this and again give that accumulation, what is an accumulation? In simple terms, it's buyers adding, or the institutional buyers adding orders into the market, right? Because they want to send the price higher. So if I'm seeing evidence of that, then I'm going to try and follow what the big boys are doing, right? It's like if you have I'm sure everyone went to school that's watching this YouTube, right? If you're in secondary school and you've got a 6'2" bully that's got anger management and likes to punch walls, you don't really want to go against him. You want to be on his side, right? Rather than go against him. Same way I want to be on the institution side. I want to follow what the institutions are doing rather than trading against the direction that the institutions are trading in, right? So I'm sure that makes sense. And that's how you become consistently profitable. You don't become consistently profitable trading against the banks. They've got too much money and you're going to lose. Same way if you're a little man trying to fight the big 6'2" bully in school, you're probably going to get your teeth knocked in, right? So moving on from these two pairs, I hope this makes sense, by the way. If you guys have any questions on anything that I've been through inside this video here, feel free to let me know in the comments or find me on Instagram. My Instagram is going to be tagged somewhere inside of the comments or on the bio. Just feel free to give me a shout, right? Now, and please, there's no such thing as a stupid question, right? I don't bite unless you want me to. No, I'm joking. But yeah, anyway, right? So you can tell it's late and it's I'm about to go to bed after this because when I get tired, I get silly, right? So moving on to USD CAD, right? So USD CAD, I was actually doing some back testing earlier. Well, this actually wasn't a back test. I was actually looking at this last week. We obviously had a accumulation down here. So in fact, let me step out into the higher time frame first. So on a higher time frame perspective, I've got the 50% down here of the previous reaccumulation, right? Now this is the 50% of the last reaccumulation that causes high to get broken. However, the 50% of the whole reaccumulation is obviously a little bit further down. So I'm looking to target these lows, right? Now, on a higher time frame perspective, right? If we even go up to the weekly, we can see that, we had a distribution, that's distributing out of a previous redistribution, right? Where we've got, you know, 1 selling order, 2 selling order, 3 selling order. We've obviously, let me even just clear the drawings for a minute. We've obviously had a final manipulation, and usually after that, I'll be anticipating, you know, price to come down and complete the distribution by breaking this low, right? So I am looking longer term for like some long-term sells. It's just where can I kind of get in, right? So coming back down to the daily time frame for a minute, I can see that we've distributed, had a redistribution. Again, like I said earlier, distribution plus redistribution equals a bearish market cycle, right? So we've had a distribution, redistribution, and obviously I was waiting to see price come back into the previous redistribution, give me a distribution that you guys can see I've illustrated over here, and obviously continue to make its way lower. So as I step down into a lower time frame now, I can see that we created this redistribution. So we've obviously, when you look at a market, right, and we don't trade lower lows and lower highs, but on a higher time frame, it will look something like this, where we take out previous lows and obviously we retrace, right? Usually back to, you know, supply, which is above the 50%, right? And after we do that, we just do the same thing again. We break previous low, come back and retrace back to 50% and above. And we just do the same thing over and over again, right? So it looks like lower lows and lower highs on a higher time frame. However, they are actually schematics. I don't look at lower lows and lower highs because I'm not an amateur. No, I'm joking. But yeah, you guys get my point, right? No, I'm not joking actually, because institutions don't care about high highs and high lows, you know? They care about filling orders. Now, continuing on from what I was saying, I want to see price come back into the 50% or above, right? Because if you look on a simplistic basis, right, you've got your lower low, lower high, lower low, lower high, lower low, right? Again, we trade schematics, not lower lows and lower highs, but I just drew that to make it easier for you guys that are watching that may not understand how I trade. Obviously, I trade Wyckoff. Shout out Uncle Richard, right? Now, obviously, where we've broken the previous low and obviously we've accumulated, my anticipation is that we are trying to make our way back up into, you know, supply, which is obviously 50% and above. Hence why I'm waiting for price to come up here and then give a distribution to send price back lower again, right? So where we are currently, last week, I was looking to see, because we reaccumulated, I wanted to see if we could get an accumulation out of here and come back immediately into my entry and obviously come back higher. Now, the reason why I said immediately, emphasis on the immediately, is that I didn't want to see price reacting out of this, right? Because then I'm thinking to myself, okay, we accumulated, why aren't we just breaking this high and continuing higher to come into my longer term, you know, sell area that I'm looking to take sales from? So from time we were reacting out of this, it kind of blurred the lines a little bit for me, right? So I had these areas marked out. I even had my limit set once we broke the high, and obviously I deleted it because obviously it came to 7 o'clock, and 7 o'clock is the end of my trading window. So I kind of just left this on here just to see if price was going to react out of my entry. If I come down to a lower time frame very quickly as well, you can see that price actually did accumulate, you know, going into the whole validation criteria for an accumulation. I'm not going to do that now, but we simply put had multiple buy orders, we had a manipulation and a break. I wanted to see if price would come back into the 50% for my entry and the 80%. It didn't do it immediately, so I kind of just put this to bed, and obviously price ended up coming back today and obviously reacting. Is it going to hold? I have no idea. But what I do know now is that I'm either waiting for price to come up into here, distribute and come lower, or for price to just confirm a redistribution by breaking this low and then coming back into here, into the 50% and above, so I can wait for a distribution to send this thing even lower, right? And I might just hold this for long term as well. That's what I'm looking at on USD CAD. I'm even going to delete this right now because I don't really need to have this on the chart anymore. So now it looks a lot cleaner, right? So that's the two scenarios I'm waiting for. Failing price doing these two, well, it's not going to fail because price ain't going to stay in the middle forever, right? But I'm not really looking to take anything outside of that, unless maybe price gives a larger shakeout, breaks the high, potentially comes in here, accumulates to bring me potentially up into the 50%. But that is a lot of work, right? I don't know if I'm going to wait for that or if I'm just going to wait for the more likely position, which is obviously going to be one of these two that I've just demonstrated or illustrated right now, should I say, right? So moving on, anything that I'm looking at as trash, I'm just going to just glide past it pretty quick. Gold being one of them. I haven't adjusted my high priority, medium priority, low priority just yet. But gold and silver are both trash, right? Right now, I'm just waiting for price to come back into the previous reaccumulation, and I'll wait for an accumulation down here in the 50% and below to send this thing higher. Failing that, it needs to break this higher, come back. Outside of that, I'm not even interested, right? One tip that I'll give you guys is that if there's not something to trade on the pair, don't try and sit and force seeing something, because you're most likely going to end in a loss, and then you're most likely going to get frustrated with yourself. And then when it comes to you having to journal it, you're going to have to look your journal in the face and say, I lost this trade because I tried to force it and price didn't go the way I wanted it to go, right? It's just low priority, so there's no point trying to force it. Silver is just garbage as well. It's just consolidating, as you guys can see. It's just staying in the middle right here. So what I kind of want to see is some direction. I know we've taken out this liquidity down here. Can we come lower down to the previous reaccumulation? We definitely can. Failing that, technically this is my previous redistribution where we accumulated, came higher, distributed, and obviously broke this new low. So if we break this high, come back and accumulate, and gold is doing something similar, then I might just get in, right? Outside of that, again, I'm not even interested. So moving on to USD JPY. USD JPY, I'm a little bit on the fence with USD JPY right now, just because I don't know what's going on with their interest rates. I've read something today that they may potentially continue increasing the rates, but again, I didn't read into it too much. I'm going to read it properly tomorrow. I think I got a call or had a client that I had to jump on a call with or something like that, so I didn't get to finish reading that. However, what I do know is that they've held the rates, and so to my understanding, the reason why is because they don't want to, I think it was something to do with inflation. I can't remember exactly. I know it's kind of late right now, but it was something to do with inflation not being low. Well, something to do with inflation. I can't even remember, to be honest. That's pretty poor on my side. I need to read back up on that. But all I know is that they're holding, the rates where they are, which is why we started to see price obviously come higher, because if they're not continuing to increase the rates, if they're just holding rates where they are, essentially they've kind of alluded to the fact that, okay, we're not going to raise the rates. So if they're not going to raise the rates even more, it leads to investors that are holding that currency to be a little bit scared to kind of hold it. And then what ends up happening is they take it out and obviously they put it into another asset, right? So because of that, Japanese yen as an actual, the actual currency, the Japanese yen futures would obviously be making its way lower. And obviously as a result, this trades on the opposite direction, hence why we've been coming a little higher. Now, I do believe that we are still going to continue being bullish on the yen. I do believe they're going to continue to raise rates. They're just not doing that now. So I'm a little bit on the fence with USD JPY. So from a technical perspective, that's why I kind of haven't really got much to really say on this. We've broken the previous redistribution. So it's like, okay, we've broken that. So technically from a market cycle perspective, we do have room to kind of come higher and be bullish, maybe to come back into the 50% of this, maybe, because we didn't actually come back. I mean, we didn't even come back into the previous redistribution that caused this to break. So for me, can we make our way up higher and potentially give a distribution in here to come lower? Definitely, especially with the fact that they kept the rates at, I think it's 0.5%, if I'm not mistaken, something like that. I'm going to have to double check that. But they've kept rates where they were in the last reading, which was 2 weeks ago. So right now, I'm kind of this is just on the back burner, if I'm being very honest. USD CHF, I'll be so honest. I mean, right now, I don't really want to get too involved in USD CHF. Reason being, because we came into the redistribution that actually broke this previous low. If I step out into a higher time frame very quickly, this is the low of the previous redistribution, and this area over here, the redistribution that broke that. Price has obviously come back in. It did come into the 50%, right? However, I'm just not convinced because the distribution wasn't the cleanest. I mean, we technically did distribute. I wouldn't have taken a sell from it personally. However, after that, we ended up, so I just boxed this as my distribution for a minute. We then accumulated, came up, gave a shakeout, gave an ugly distribution, and obviously ended up breaking this low down here. And now I'm like, okay, could we potentially come into this 50%? We can, but I don't know. Because we've also got liquidity up here. If I just go into a lower time frame very quickly and show you guys that in detail. So we have got some liquidity resting above here. Not that price has to take out liquidity, but at the same time, we didn't even come to 50%, and we have got some imbalance above that liquidity as well. So price could continue coming higher, and it's well within its right too. So I don't really want to get caught, in some sloppy sells down here, especially when we've got the previous reaccumulation over here, and it looks like we're approaching it. So I know if we accumulate and come, continue higher, and I'm trying to sell in here, I'm going to end up getting spanked, and I just don't really unnecessarily want to do that, right? So that's what I'm looking at for USD CHF. Moving on, NZD, USD. I mean, as I just step out onto this time frame, I can see that we created a new redistribution where we accumulated down here, price came up, gave a little shake out, and obviously we've now completed the new redistribution. I can see that for the redistribution that broke this previous, the larger redistribution, so i.e. the reload, where you can see price accumulated, came up, distributed, and obviously broke this low. We have come into the 50% of that, and then we started to distribute, right? Now we did confirm the distribution. We did confirm this distribution up here. Now we didn't get the final manipulation. Instead, we started to accumulate, distribute. We haven't confirmed the redistribution yet. So as far as I'm concerned, I don't really want to have anything to do with this until at least we break this low, confirm the redistribution, come in, give me the lower time frame distribution, and send this thing lower, right? So I hope that makes sense. AUD USD, similar sort of thing, but we just didn't confirm the distribution. I know we've reacted out of, if I just zoom out a little, we printed the redistribution on the higher time frame. We've got the last redistribution that broke this low as well. However, we've come into, I'll just come down to a lower time frame now. We came into the absolute lowest, the most nastiest redistribution that broke, that the last redistribution that took place before this low actually got broken. So we've reacted out of that. However, again, where we haven't completed the distribution, that we've had sell orders coming in, we've had a final manipulation, we weren't able to get beneath this low just yet. Maybe on the futures I haven't actually checked that yet. So let me go and check that right now. Let me go and check it right now. Okay, so 1, 2, 3. Did we break this? Okay, on the futures, I'm gonna have to double check that properly now. On the futures, no, I don't think we did break it. So the low on this is 63595. The low on this is 63. Oh, okay, so it didn't actually break it. Okay, cool. So on AUD USD, we haven't confirmed the redistribution on there. I'll just go back to AUD USD real quick. So we haven't confirmed the distribution just yet. So as far as I'm concerned, there's no reason for me to do anything on this. So I'm not even interested. Now, last but not least, Euro Pound. I mean, it just looks messy, man. I don't even want to look at this. In fact, forget Euro Pound, right? Don't care about Euro Pound right now. Now, let's quickly move over to the indices, because I don't want this video to drag longer than it has to, right? So, from a fundamental perspective, I am bullish on this pair. Well, on this indices, should I say, not this pair. Now, why is that? Because again, the dollar is bearish, right? The dollar is a safe asset. When money is flowing out of safe assets, where are they flowing into? Risky assets. What are regarded as risky assets? Indices, cryptos, So because of that, I'm obviously bullish on this thing. Now, from a technical perspective, market cycle wise, if I go into the higher time frame, we did have we've been reaccumulating on this thing since since August, as far back as I can get to. So 2002, we've just been absolutely rallying. Why is that? Because obviously indices are designed to do that. With US 30, the top 30 companies in the US, right? But when one company is doing shit, excuse my French, they just take it out and replace it for something that's doing well. So this is designed to do well over time, which is why, if you look at the chart carefully, you can see we've been going up over time. Naturally, you're going to have your retracements, of course, your little shakeouts, or your large shakeouts, should I say. But overall, this thing is going to go higher, right? And right now, because of the dollar and the fact that it's bearish right now for all the reasons that we spoke about earlier in this video, we are bullish. We had an accumulation. Well, let me step back for a minute. So, on a higher time frame, we had a previous reaccumulation. Price didn't come back to the 50%, nor does it have to. And what it did is obviously distributed. We've had a shakeout, and it looks like we're continuing our way up now. So if I just zoom in, go on a lower time frame, after we had the shakeout, what do? We started to accumulate at the same time as obviously fundamentals started to shift to bearishness on the dollar way back in April, right? I say way back as if it wasn't like a month ago, but yeah, so we reaccumulated on a lower time frame. If I can maybe do down to the hour now, we've just been having a series of reaccumulations. So we are in a bullish market cycle, which supports the fundamental narrative because of the dollar being bearish and the money flowing out of the US government bonds, right? So now, we've been reacting out of 50%. We had a reaccumulation. We reacted out of the reload. I think it was somewhere in here. Can't remember now. But yeah, so now the most previous reaccumulation that we have is this one right over here. Now, we broke the high. We tried to come back to the 50. We haven't just yet. We have got some liquidity just below these lows as well, as you guys can see. So my thing that I'm looking at, the thing that I think is probably the most logical for me to look at right now, whether it's going to play is a completely different situation, because this thing looks like it ain't even trying to give up. But I would like to see price come back down into demand, right? Discount, if you will. And I want to see price come in, give an accumulation, i.e. evidence that buyers are coming in, and I want to send this thing higher. Target wise, if we come lower from here, then that would be my main target. But if you wanted to, we really could hold this thing for all-time highs, because I don't see the dollar starting to become bullish again, because we've made a significant progress towards the Fed's 2% inflationary target, right? So that's what I would like to see. If I just come down to a lower time frame one more time, that's what I would like to see. I want to see price come back into the previous reaccumulation, and obviously, start to go higher off of this area. Now, can price come and give a larger shakeout? It definitely can, which is why I'm going to wait for my confirmation, right? It's not just about waiting for price to come to your area and just banging a buy limit off or banging a buy market execution. You want to see price come into your point of interest, number one, and then you want to see price give evidence that the market actually wants to reverse from this area, that the institutions have interest in, sending the market up from this area. So that's exactly what I want to see in here. Failing that, I'm not going to do anything else. The only other thing that will get me involved is potentially if we do come higher, let's say, and then we give a distribution followed by, that accumulation to confirm a larger reaccumulation, then obviously I'll change my point of interest that I'm focused on from here to obviously in here, right? So I hope that makes sense. Now, clear up my chart a little bit. So going down to the S&P 500, it's exactly the same thing, really. The reason why these move similar is because a lot of the companies that are in the US 30 are also in the S&P 500. What is the S&P 500? The largest 500 companies in the US, right? See how I slowed down there? That's how you know it's time to sleep in a minute. Now, for this, obviously, we came into the previous reaccumulation. reacted. There was actually a nice, delicious entry in here as well. Was it this or was it Nasdaq? I can't remember now. But yeah, I believe it was this anyway. But we reacted out of, if I just show you here, we actually reacted out of the 50% of this thing, and obviously continues to go higher, right? So now that we've broken this high, I've got an alert down here, as you guys can see. I want to see price make its way down into the 50% and below. Give me an accumulation, blah, blah, blah. And obviously give me an entry so I can target this high. I will take most of my volume out up here and obviously hold the rest up until all-time highs, which you will find up here at the $6,166 margin, right? Or price margin, price area, should I say? Jesus Christ. Right? I'm not editing this, by the way, so you guys are getting the raw and the real. Do you get what I'm saying? No edits are getting done in this, so you lot can see that I know exactly what I'm doing. I'm just a little bit sleepy right now, right? So let me just clean that up. But yeah, in essence, S&P 500 fundamentally bullish for the same reason that US 30 was, right? Now, coming down to the Nasdaq. Oh yeah. Nasdaq. Okay, cool. So on the Nasdaq, we've officially broke the high. So we've confirmed the reaccumulation now. So same as S&P 500 and US 30. I just want to see price come back into discounted price, because again, the institutions like to buy at discount and sell at premium, as all of us do. If you're going to buy something, you want to buy at a discount. If you're going to sell something, you want to sell at a premium price. Institutions they go off the same, economic principles, if you will, right? So I want to see price come back into discount. I want to see price start to accumulate, and then obviously I will be looking to take some buyers in there, right? And last but not least, U to the K to the 100. So I want to see price potentially, ideally, I would like to see price come lower into, don't know where my boxes went. I swear I had a box on there. I want to see price come into this box, preferably, just because this failed to come to the 50%. It doesn't need to come to the 50%, but I would have liked to see that. So I'm going to be looking at these two areas. Area number one is going to be this very ugly reaccumulation down here, right? I want to see price come in here, give an accumulation, right? So if price can come in here and give an accumulation inside of this 50% without breaking this, then I'll take my bias based off of this, right? However, failing that, if we do continue to come lower and we come into this, then that's fine. As long as I get an accumulation in here, then I'm happy to take bias from in here as well, right? Reason being, because technically at that point then, this here could just be the shakeout of the distribution to just bring us back into this accumulation, right? 50% and below. Give me an accumulation, again, i.e. evidence of buyers coming in. I always repeat that because it's so important, right? That's all an accumulation is. It's just evidence that buyers are coming into the market. Price comes into your point of interest, that's great. But if I don't see evidence, a lot of the time, 90% of the time, I'm not getting it if I don't see evidence, right? So with that being said, ladies and gents, I hope you guys have enjoyed this and got some value from it. For all my traders, for all my bready boys and girls out there, I hope you guys have really, really gotten something from this. I hope this finds you well. I'm taking my ass to bed right now. It's officially 42 minutes past midnight on a Tuesday morning, and that is a wrap, Jack. Make sure you like, comment, subscribe, all of that good stuff. Make sure, please, there's no such thing as a stupid question. If there's any questions that you guys have, anything that you guys don't understand, let me know in the comments so I can make some detailed videos about those things in particular. Or failing that, just find me on Instagram. My Instagram will be tagged somewhere in here, and I will be more than happy to help, right? So appreciate you guys. Take care of yourselves, and remember to keep your head on that bread. Peace.